doing? Yay!
Yay! I'm good. How are you?
Good, good.
Good.
All right. Well, thank you for doing this. I appreciate it.
Thank you for having me. These are awesome.
Yeah. So it's my first ever IG Live, so I'm a little nervous.
Don't be. Break a leg.
It'll be good. Yeah. It'll be good. So I guess I should get you to introduce yourself first and kind of go over, we're going to talk about mortgages today.
Yes,
So
absolutely.
maybe you can tell everybody a little bit about you and what you do, and we'll jump in from there.
Sure. So my name is Eden Simari. I'm with Quantus Mortgage Solutions in Calgary. Our office, we have offices all through Alberta and BC and Whitehorse, Yukon. But I'm mainly Calgary and area, and interior BC is where I service. So I've been in the industry since September 2003. So this is going on over 17 years now, since I was 10.
So you've seen it all.
Yeah, this is, yes. So I am a licensed mortgage broker, and I love what I do. I love interacting with people on all different kinds of transactions, whether they're purchasing properties, renewing, refinancing, everything you can imagine, budgeting advice, anything to do with basically money, and anything I can't assist them with as far as, say, financial planning and accounting, then we have some great people we can refer them to. So that's basically me in a nutshell.
Good, good.
Yeah.
Sounds great. I guess the biggest thing that people have been asking us about is how are things changed? How have they changed with obviously all the COVID stuff, and then you have the energy sector side of that too. So maybe you can talk a little bit about how the economic fallout and the lockdowns and everything has affected how lenders are acting right now.
Yeah, so it's a really good question. I think it's on top of everybody's mind. It affects people very differently depending on what sector of work they're in, where they live in the province. But essentially COVID came heavy and hard for everybody, and it was pretty monumental to see the institutions that we deal with. Our firm has 47 that we deal with, but just federal institutions, provincial institutions, credit unions, private lender, literally mobilize their staff in the thousands of people nationally to work from a virtual platform. And so our systems, now we've always been virtual, and many of our lenders have too, but the Law Society has adapted to virtual signings. I mean, your industry has done a tremendous job adapting to being virtual and offering open houses. So it's pretty tremendous how quickly our industry adapted. And so we didn't see a lot of downtime as far as processing applications. We did see a little bit of confusion in the first week as to how underwriting might change. But as far as service standards, we didn't see too much of a drop. The only pressure that we saw for the lenders that affected consumers was just when people were calling for payment deferrals. The lines were drastically affected, but that really died down about the first week of April. So all in all, the industry has responded incredibly well, and we're still able to facilitate entire transactions from start to finish just as efficiently as we did even a few months ago, which is a good sign.
Yeah, that is a good sign. And maybe we can jump over to that topic would be the mortgage deferrals, because I know that's something that people ask about. And are you seeing a lot of that?
Not as much anymore. They're still very much available, but I think for a lot of us, we're month 2, some people 10, 11 weeks into quarantine or isolation, working from home. So this has become a very much new normal. In the first 3 weeks of March, it was just chaos as we were all trying to figure out what to do. So I can tell you that most of our lenders, if you are still in a need of assistance, you can usually get through to their customer service lines within a few minutes. Or if you request a call back, they're calling back same day or next day. So the efficiencies are there. Essentially, mortgage deferrals have always been available to clients. They just weren't advertised in this magnitude. So the 6-month deferral is an extreme case, but essentially what it is the lender allows you on a case-by-case assessment, depending on your financial need, to either defer 2 weeks up to 6 months. And you have to call back every month and update them if you received curb assistance, if you received EI, if you went back to work, if you picked up a side job. So just like the tax programs, you have to stay in touch with the bank.
So would they expect you, sorry to cut you off there, if you were getting assistance and curb and things like that, would they expect you to resume mortgage payments?
Would they expect you to what, sorry?
Resume mortgage payments?
Yes. So how it works is it's not a forgiveness, it's a deferral. So so let's say you were qualified for 3 months of deferrals. Yeah. So June, July, and August. Your payments would resume in September, and you have to be very upfront and honest about your situation. If, for example, their systems will automate the 3 that you missed to come out on the next debit. So that's 4 in 1 in some cases.
Oh, wow.
So people really need to be proactive. Don't be afraid to call the bank. They don't want you to miss a payment as much as you don't want to. They want to find solutions. And if you say, I need more time because I don't have enough savings or cash flow, then that's when they start to re-amortize it in over a longer period of time. Okay. You will pay interest just like you would if you were paying it. Yeah. And you have to pay it back. Like it's not...
Yeah, it's
gone forever.
Yeah. So that's what I was going to ask, because I didn't realize they would pack it in like 4 at 1 and expect you to be able to do that. Because typically, if you can't afford to pay 1 or 2 right now, it doesn't make having 4, at once available to you.
So I don't want to say that that's standard practice at every lender, but that's why you have to get on the phone as soon as possible with your particular lender and be very upfront about your situation, because these, especially the big 6 institutions, they have massive computer systems in place that will just arithmetically see that you've missed that payment. Right. And so if you get on the phone and say, look, like, I'm not going to be able to pay all 4 back right away, but I'll drip it over the next 6 months to a year, then they'll work something out with you, especially if your mortgage is insured, because the deferral programs primarily are offered through CMHC and Genworth and CG.
Oh, okay.
So, yeah, it's, but they're really for you've lost your income, you do not qualify for any of the aid, you do not have any other work coming in. It's not meant to be I want to go on a cool vacation or build my dream basement and not have mortgage payments. Trust me, I did the math and I was like, if I didn't have a mortgage for 6 months, but they'll figure out pretty fast. It's meant to be for emergencies only.
Yeah, no, and fair enough. That's good. I wasn't too sure exactly how they were going to have people repay them, or if there's interest on them, or, like you said, 4 come out at once, or what the deal was. So it's good to know.
I'll just add, Caitlin, the one big thing I think a lot of people are worried about is, will they report to the credit bureau? And the answer is actually no. If you're proactive enough to call them and explain your situation before it goes NSF, they won't report that as a late payment to Equifax, which is really important because it's not a missed payment, it's just a deferred payment. And so there was a lot of hesitation that people were, oh, I don't want this to affect my score, but that's not the case. So that's good.
Well, that is good. Good.
Yeah.
Back to lenders.
Yes.
Have they tightened their purse strings right now? Like, if I'm a new buyer and I'm looking to purchase for my first time, if I've got my pre-approval done before this, is it still stand? If I need to get a pre-approval done now, am I in a worse position than I was before? How are things looking on that front?
Yeah, that's a really good question. Essentially, if you had an approval where your financing was met prior to March 24th, 27th, depends on the lender, if there's no material changes to the loan and you're just marching closer to possession, and your possession is within that rate hold period, in most cases, the lenders are honoring the file as is because it was kind of pandemic underwriting. Now, going forward, even at pre-approval stage, like we've talked about before, our business model is to always underwrite with income upfront all of our files. That's now become mandatory for the lenders now. So, which I think is brilliant because it gives you peace of mind as a realtor and the buyer that not only has the lender reviewed your income before you actually place that pre-approval. It's not just a rate hold. Someone's actually underwritten it for risk and said, yes, you qualify for this.
Right.
Now, on longer possessions or new builds, it was standard practice before COVID anyway that you would need to provide a pay stub and a bureau 30 days out from possession anyway. So with those files, we're very hands-on to say, listen, as of today, nothing changes. So no new debt, don't shop. If you even have a thought in your mind about changing your jobs, you call me first.
Right.
Because that absolutely could affect your approval. And, you know, they are looking to see that you are gainfully employed right now, not looking at EI or CERB as a debt serviceable income, because those are really only available until September.
Okay.
Unless you're, say, on a maternity leave, receiving mat leave benefits, and you have a return to work letter, then we've always been able to use your return to work income.
Okay.
But as far as assistance, we don't, the industry isn't really using those because they're underwriting 6 figures over a long term of repayment. So they want to know that the income's logically going to continue.
Okay.
So income up front, they will call employers, and especially the self-employed sector. You're in a very odd window of time right now where lenders don't want to use your 2017, but you may not have filed your 2019. So it's so important to talk to a broker to review your whole picture before you get, because the fun part is with you and shopping and dreaming, and you don't want to make an offer and you guys do all the work just to find out the income's not going to work. So
yeah, and that's good, like you said, that underwrite the file beforehand. I don't know why that wasn't always standard, but it's good to know that it is now.
Yeah, and I mean, it's something I did because I was a former underwriter. It's just something I need to do to be comfortable, and the clients learn a lot from that process, because you'd be surprised, even salaried income individuals don't always know how a bank's going to review their income or what they can accept. So yeah, I, as far as tolerance, no, we haven't seen anyone tighten up lending in areas saying no Alberta mortgages or no self-employed. That has not happened. Okay. Which is excellent, because we have a high sector of self-employed people in Alberta. Yeah. Oil and gas, they are being sensitive too. Like they do look at that as a, you know, holistic, like how viable is this job, and they'll be calling HR. But yeah, still lots of stuff going on. So
good. So maybe we can move on to rates
yes.
Again in relation, because I think a lot of people expected with Bank of Canada rates getting dropped or staying low that was going to be reflected in the mortgage rates as well. Yeah. Is that the case, or have we seen things increase?
Yes. So it's COVID, like this spring was setting up to be pre-COVID. 2020 was looking like it was going to be a fantastic year. Volumes were up, things were looking great. And then COVID came and the oil wars, and here we are. But we're Albertans and we're pretty resilient. So what I can say about rates is variable rates and fixed rates, they move independently of each other. They're monitored by 2 different markets. So to answer your question about the Bank of Canada, that's more the variable rates. So yes, the Bank of Canada over the last 2 years has been on a slow march up. And then since about October of last year, they've been so slowly adjusting downwards because of global economy issues, national economy issues, etc. Now in March, historically, never in my career, I don't think in the history of the Bank of Canada, have they dropped 3 times in 1 month. Yeah. But that was done as an emergency solution. They cannot go lower than they are right now. So prime in January was 395 and prime today is 245. So in less than 90 days, we've dropped 1.5 points. So if you were a variable rate holder from a couple of years ago at prime less a full percent, you are having a great time. But when prime drops, you know, the banks are really struggling to be profitable right now, and their margins just went razor thin. So the discounts off prime almost completely disappeared. In fact, in the middle of all this in March, they started to be prime plus rates. We're back down to prime less 0.2, for example. So you're at 2.25 for a 5-year variable in most cases. So But variables are a very case-by-case product. I'm a variable believer. I historically, they will tend to outperform a fixed, but things are very uncertain. And as a first-time buyer, that might not be the product for you. Even to seasoned variable client, as the fixed start to come down towards where the variables are, that set it and forget it, budget my life around that number is making fixed attractive to some people. So, it depends on who you talk to, but I would never recommend one rate or the other for all my clients. But
so if you
anyway.
are variable right now, and
Yeah.
I think Andrea just asked a question here. That's me, but for how long? Would you advise somebody like that to lock in right now?
So no, and not necessarily. It's kind of a loaded question because I need to know your personal situation, because if you're thinking of selling in the next prior to renewal, as soon as you lock into a fixed, you're giving up that 3-month interest guarantee calculation when you go to sell or to borrow against that house again. Also, the Bank of Canada has come out many times since the middle of March to say, and I think we can all, whether you have an economics degree or not, you can see that it's going to take time for economies to recover from this, globally, Canadian, US. So they don't think they're going to increase their overnight rate for another 12 to 18 months. So if you're in a variable, you'll actually, especially if you have a deep discount, you'll have a really great rate, hypothetically, for potentially another year before it even goes up. And when it goes up, it might only move by a 1/4 point, maybe a 1/2 point, but even still, you're just getting back to where you could potentially lock in now anyway.
Okay.
So if you lock in, and it's always an option in a variable, there's no fee to do so, but just remember that if you're even thinking of selling, that higher IRD calculation could factor in, and that's just simply more equity that you've paid in a penalty to the bank when you go to sell. So if you're not thinking about selling and you're really emotionally not on board for writing out a variable, then I would call your broker or me or your banker before you do. But yes, you can absolutely look at that.
Look at that as an option.
Yeah.
Okay, that's good to know.
And then
sorry.
I was just going to say, on the fixed rate side, they move with the Canadian mortgage bond and asset-backed commercial paper, so it's different pricing. This year, the 5-year fixed and fixed terms in general have been wildly volatile. So we've seen them go as low as 2.34, 2.44 before COVID. They went back up to almost 4%, and now they're back sub 3%. So it's really hard to say what's going to happen to the fixed market, but I think if you're a set it and forget it person, you want to budget around that. Being under 3% on either rate is historical. Like, it's 5% is a normal rate and up. So anything under 5, especially under 3, you're doing great. So
okay.
Yeah.
Good. I guess maybe can you speak to people that have been, and I know you kind of covered this a little bit, but people that have been temporarily laid off.
Yeah.
And so they are coming back around. I don't know if that kind of factors into the same thing as you said with people on mat leave. You look at their job is still there when they come back. But are they going to be affected if they wanted to go and get approved for a mortgage right now? But they're right now, but maybe once they come back, they've been temporarily laid off. Is that going to change their approval amount and qualifications?
Yeah, it's a really good question. We haven't seen a lot of these come up, but they will, I'm sure. Especially as the phases are reopening, because not everybody knows what phase 2 and 3 looks like, because we have to see how phase 2 or phase 1, I should say, in Alberta will go. So the way the lenders will look at it is very case by case. So they're going to look at your down payment threshold, your credit, your tenure in the industry. Like, if you've been on the job for 2 years plus, and then prior to that, say, you have your post-secondary education, so you have that skill set, it's likely you will go back. They may look at a return to work letter if they can verify with HR that income is definitely there. But if you're one day out of university and you just got temporarily laid off, mom and dad are gifting everything, that's a bit skinny for them. The default risk on that could be higher. So what we're actually seeing more of is I've had a few in the last 2 weeks where we were doing pre-approvals for clients and they called me and they said, Eden, I had two choices. I could either take a temporary layoff, apply for assistance, or I could voluntarily take, in some cases, like a 20% reduction in income to stay on staff. And so those files, they're guaranteed by September 1, they're going to get that job at the previous salary back, but we're underwriting it based on their reduced salary just for more conservative assessment. It doesn't have a huge effect on their income or on their qualifying, but I'm seeing more of I'll take a reduced income for the next 4 months, then I'm going to quit.
At that right now too.
Yeah, and the lenders are still looking at that because they're still employed. Those are still verifiable. And quite frankly, if they can afford it on the reduced income, then when they go back to work in the fall, that's just gravy. It's extra cash flow in the house again. So
yeah. That's it's always nice, right?
Yes, absolutely. Yeah.
Good. And then maybe speak to refinancing. Are people doing that?
Yes.
They are. Okay.
Yeah, people refinance for a number of reasons. I think where we're seeing an increase in refinancing is if your income is insulated from this, where you've been able to transition to work from home, you're not laid off, and you can qualify right now, because that's a big thing. You still have to be able to qualify with credit and income.
Yeah.
People that got in at the mid 3% range or higher, even just 2 years ago, depending on their goals, it is a time to look at the savings of a much lower rate. So we can do an analysis if you would actually, save the penalty to break and be ahead on a new term, buying yourself an extra year or two by taking a new 5-year at these, sub 3% rates.
Right.
So we've seen a lot of rate capture refis. We do see there has been an increase in spousal buyout files. I think that was probably coming before COVID, but
solidifies it. Yeah.
And
a house with somebody, you really get to figure out what you want, I'm sure.
Yeah, I'm ever the optimist, probably to a fault, but at the end of the day, people don't realize that's a reality for a lot of Albertans. We've been in a tough economy for a while. Whatever your reasons are for potentially going your separate ways, we are seeing refinances to do spousal buyouts or even the high ratio spousal buyout file. So we do a fair bit of those in my office, and so that's definitely something we can review for people. I think from what I'm hearing from some family lawyers, I think that could be an increase in business in the fall. Just people that just want to move on for whatever reason. So there's been some of that. But as far as cash flow reasons, a little bit of that, like I want to refi to re-extend my amortization. Yeah, there's a little bit of that, but appraisals are a big thing with refis. And as you know, as a realtor with market comparables, there has been an effect on values in the market with COVID. I don't know where that's going to go. In some neighborhoods, properties still appraise, no problem. But there are some that, there were some fire sales a couple weeks prior to COVID, and there haven't been any good comparables. So when we actually do the appraisal, the equity position isn't there to refi. So
you are seeing that impact the appraisals?
A little bit, yeah.
Sale ones. Interesting.
It's so case by case, because like I said, depending on the quadrant you're in and the neighborhood in Calgary, some neighborhoods, as you know, retain their values through thick and thin. Others have really been affected. So it's just a matter, we try and do the homework ahead of time with you, if you know the client on the refi side, getting a feel for comps in the area, and talking to our appraisers before the client goes and spends the money on an appraisal, to say, like, listen, these are the upgrades they've done. This is what they feel the house is valued at. Do we even have a shot before we waste everybody's time? And some places the appraisers will come back and say, yeah, I could support that. And, obviously they have to do their research, but yeah, we're seeing a bit of that too. Some appraisals.
A little wonky. Okay. Interesting. Yeah. And what would you say the biggest hurdle that you're encountering right now with people's either qualifying or getting what they want?
Hurdles. I know you sent me that question. I was really trying to think about it, because I like to think that it's never a no. If it can't be done right now, we as brokers, we have so many neat solutions that we can come back and say, okay, like you two right now, as it stands, don't have the income to qualify for this, but can we put a plan together to take advantage of the first-time homebuyer incentive for down payment, to lower your premium threshold? Do you have a co-signer? Can we talk about what that looks like for them? So we always try and come up with solutions. So I haven't had too many, I think a little bit appraisals in the condo market have been a hurdle. On refis, people wanting lower rates, but they don't have the value to redo it. So the condo appraisals have been a little bit of a hurdle lately. It just means we have to revisit it maybe in the fall or next year. And then self-employed people, this is a big sector of my business. I'm an incorporated business owner myself. The timing on taxes is crucial. If you're looking to do financing today and onward, and you have no reason not to file your taxes.
Yeah, everybody file your taxes.
Please,
you can't lend, right? Like, period. There's no getting
well,
that.
It's case by case, because some lenders will still, because the date got extended, and you know, especially if they're out busy in their industry, they might not have been able to get their stuff off to the accountant. But if it's just, oh, I haven't gotten around to it, please get around to it, because that 2-year average from 18 and 19 is really what the banks want to look for right now. The one caveat being, if you're going for traditional financing, people also have to remember that the banks need your balance owing from 2019 at 0. So if we haven't budgeted for that and we're thinking of our savings going towards down payment, that's a hard stop for the bank. So we have to so it's a weird time of year for self-employed people, tons of options. But ideally, unless there's a reason your accountant is saying, hang on, then I respect the accountant for sure. But that is a little bit of a hurdle.
Taxes. Okay. That's the rule.
Not necessarily because people are trying to pass the buck. It's just they haven't gotten around to it. It's been crazy. They have kids home, like whatever the reason. So.
Yeah. No, it's kind of on the last bottom of the ladder to do, right? Nobody likes doing it in general.
No, but, I know.
Yeah.
God bless accountants who love that stuff, because I deal with numbers all day and I can't handle it.
No interest, but needs to be done. So I think that was kind of it in terms of the questions I had for mortgages. Is there anything else that you wanted to talk about or mention?
I think just for people to know that, you know, really, if your income is insulated in the sense that you're still able to work, maybe you're an essential service worker, a frontline worker, God bless you, thank you for what you're doing. Maybe you're able to work from home and you've seen no disruption to your overall financial picture. These rates are absolutely historic. And I mean, you could probably speak to what you think might happen with values and inventory, but I don't see any reason why you should wait. If all things, you know, on your approval and your pre-approval, everything works out, we're starting to see an increase in transaction, which is, it's kind of the positive boost we needed, because I think everybody is getting a little tired of this. So
I mean, like you said in the beginning, I think we've had a great, prior to all this stuff, we had a great start to the year. Like, things are on track to be better than they have been in a couple of years. Not so much price, but consumer confidence and in terms of sales, like things were going really well. And this put kind of a hard stop to it for a bit, but we are seeing things start to pick up again, a bit slower. But I think maybe that does have to do with people taking advantage of the rates right now. And you know, unfortunately, some people are going to be in a position that they have to sell and, you know, take advantage of those deals right now.
And I think, you know, to give people some, rates are very volatile. Who knows what could happen? Nobody knows. Not even the Bank of Canada knows. But logically speaking, those rates are probably not going to go anywhere. We might see some fluctuation in the fixed market, but if you want to wait until you know for sure that you're back to work, you're in one of the later phases, and you want to revisit this in the fall, I mean, that's okay too. You don't have to rush into this, but it is pretty neat to think that that the rates are kind of helping give that boost to people that are like, you know what, maybe I will take a shot. So
and for people that don't know, how long, if they were to do a pre-approval with you right now, how long can you hold that rate?
So the majority of lenders are 120 days. So if we were to submit it today, that would take us to about the 11th or 12th of September.
Yeah.
Just there's a couple long weekends in there. So yeah, about the 10th to 12th of September. And, you know, when you work with a broker, we advocate for the client ourselves. So we represent them to the lender and facilitate the transaction for them. So when we secure the rate hold, that's not necessarily the end rate. The goal would be if it drops between then and a week prior to possession or throughout the rate hold period, that's our job to keep an eye on that.
Okay.
And surprise you with an even better rate if it's available. So
yeah, so maybe a benefit of working with a broker over a big bank, correct?
Well, yes, because, you know, and I deal with a lot of the big institutions. So when I say this, it's just that when you deal with a bank specialist, that bank specialist is employed by that banner and their obligation is to the bank, not to the consumer. It's a weird thing to think about if you've always banked at that bank. You think, oh, I've been here since I was 12. They'll give me the best rate. But actually remember that it's their, no, they're in the business of debt and making interest off it. So if they think they can get you to pay this, even though they know their floor is that, whereas we kind of keep their feet to the fire and say, well, we know what your wholesale is, so
especially
give it to us or we'll go.
Yeah. What do you say, 47 different lenders that you can pull from? Yeah, I mean, they've got to be working with you, right, on that and hold
to
the fire.
Yeah, and I mean, those are like big charters to credit unions to private money to be banks. So we don't have 47 major banks in this country, but it just means so much choice. So
yeah, well, that's good. Yeah, good. Well, thank you so much for doing this, Eden. I really appreciate it. And I think that was some great information for people.
Absolutely. So if people have questions, they can shoot me a DM or you, and we can follow up. But thank you so much for having me and getting the word out.
Your time too. Okay. Thanks so much.
Thanks. Have a good night.
Thanks. Bye.